another part to the cash flow statement, or the section that I'm going to be covering here quickly, is the investing activity section. So that is this section that is displayed right after the operating activity section is prepared and displayed. So when it comes to investing activities, the focus is on long-term investments, such as plant assets, equipment, property like building, land, and we have to figure out again the cash amount that's either a gain or a loss, but we're only focused on the cash that's received or the cash that was paid out, um, specifically for long-term investments. So scroll over here. This is provided from this exhibit here, 1610, this book value, accumulated depreciation, and cash. So the book value, we're going to just use this as an example to figure out what our investing activities is going to be. It's going to be from plant assets. All right. The plant asset, for example, had a book value of $20,000. That's the cost. Accumulated depreciation of $12,000. And the cash was $2,000. So this is the cash that was received in exchange for disposing of the plant asset. So what we have to do is, well, we have to determine whether this is going to be included in the investing activities section or not. And it is, because it was a plant asset. So this is something that's included in the investing activities section. Also because it is a non-current or long-term asset. And also we have to figure out whether this cash should be an increase or a decrease. So to just prepare an entry so that we can visualize how this works, is we're going to first go ahead and record an entry. Look at what's going to be debited and what's going to be credited that reflects the disposal of this plant asset. So we received cash for $2,000, okay, and disposable of the assets. So we're going to go ahead and debit cash for $2,000. And the book value on this asset was $20,000, which means that this was a debit to this asset account for $20,000. But once you remove it from your ledgers, we're going to have to credit this plant asset by $20,000. So I'm going to go ahead and provide a little bit of room here. I'm just going to go ahead and put on here plant assets, and this is going to be a credit of $20,000. All right. Because we removed it because we sold it for cash for $2,000. All right. Okay. Now, when the plant asset was acquired and used up, the depreciation that was accumulated was $12,000. So whenever you do record depreciation or accumulated depreciation, you are crediting that account, which means that when you do dispose of the asset, you're going to have to remove or eliminate that accumulated depreciation from your ledger. So in order to do that, you're going to have to debit $12,000 to accumulated depreciation, that account. There we go. And accumulated depreciation is a contra asset account that's directly linked or connected to that plant asset. Okay. So when you do debit accumulated depreciation and then credit plant assets, you have eliminated the balances in those accounts. So you just cleared them out. But there's a difference here. We see that the debit column has a $14,000 balance, and we have $20,000 credit balance. So we see that there's a difference here. $20,000 in total in credit column, $14,000 in total in the debit column. So there's a $6,000 difference here. And so this $6,000 is going to be debited to a loss account called loss on the sale of the plant assets. And you can see on the left hand side on the screen, in the PowerPoint here, The loss here is recorded in the income statement underneath other gains and losses. Loss on sale of plant assets of $6,000. This is what it's referencing here. Okay. Now, we're just focused on, when it comes to the investing activity section, this cash amount of $2,000. So this is going to be an increase in cash that's going to be reflected in a statement of cash flows. So I'm just going to go over here, zoom out, and then right underneath investing activities, I'm just going to put on here cash received from sale of plant assets. Plant assets. And that's going to be a plus $2,000. So normally the investing activity section along with the financing activity sections have less items in them than the operating activity section. All right, so this is it for the investing activity section, and the next recording is going to be on financing activity.